All right, hey everybody, Sam here again. You should be able to hear the sound and see the screen. We're looking at a slide. I'm going to go through a few slides for about 10 minutes, and as long as you don't have any questions, we get through other questions on that, and we'll get right into the live charts and start to apply this stuff. Thanks, Harley. How you doing? How you doing, Boyke? Good to see the familiar faces in here. Jason, how you doing? Excellent. Jason Volkner. Now, Jason Volkner, just so you know, he could probably be leading this session. He knows this stuff so well, and he's doing real well. So good to have Jason here as well. Great stuff. And Boyke, same thing. Excellent. All right, so you should be able to see the screen. I want to make this very structured and keep it real simple. So the challenge today is to just keep it this simple. As you look at on the screen here, what I have, really the two most important parts of a trade. The trade setup, okay? Trade setup specifically. Number one, the quality of the supply and demand level, okay? So the supply and demand level itself, and then the profit margin. This number two, I think people don't pay enough attention to, but for me, that number two is almost more important than number one. Because if I have that number two, I'm very confident that the market is going to move in the direction I think it's going to move in, and then I actually go back and deal with number one. I try to find a low risk, high reward way to get into that market for that move. Does that make sense? Okay, so figuring out where markets are going to go, not that difficult. Getting the low risk entry to participate in that move, that's number one. Make sense? Okay. Yeah. So let's move on. So what I'm going to do here quickly is run through a number of trades. Now the trades I'm going to show you are all real trades. These are trades taken in our either in the XLT account, that's the live trading room, live Forex trading room at Online Trading Academy. So that's where we spend most of our time doing our real trading, by ourselves and with students and everything else. So I'm going to run you through a number of those. Okay, some of those are taken there or in the futures trading room. When I say XLT, that stands for Extended Learning Track, just so you know, and that is that's the live trading room. Okay. So let me run you through some, and we really want to focus 100% today on these 2 points when we're finding a trade setup. A good supply or demand level, because that's where prices turn, and then a quality profit margin. That's going to determine whether the trade is going to work or not and where it's going to go. All right? We'll apply this to short-term trading and longer-term trading, but we'll focus more on shorter-term stuff today. So now the one thing I'm not going to go too deep into are the core concepts of the supply-demand strategy, because we've done that so many times. So if you're new to the session, just go and review some of the recordings. There are plenty of recordings on FX Street on the FX Street website, on the Online Trading Academy website. Let's dive in. So here is trading from I have to update this now and get some May statements in here. That was a big travel week, so I didn't do a whole lot. But most of that trading was in the Forex market. Okay? So let's take a look. I'm going to flip forward here. If you look, here is one of those. So I traded 3 days that week. Now I do an equal amount of day trading, swing trading, and longer term position trading. What I'm showing you here today is just the short term stuff. Okay. So on the 27th, one of those 3 days, you should see it on your screen now. You can see I took 3 trades. Not a big deal. Okay. In our these are 3 XLT trades. One was in the euro. That's the euro right here. The next one was in the Japanese yen, and the next one was in the euro bund. Okay, but we'll focus on the currencies here. So you can see the majority of profits were in that Japanese yen trade. Okay, but let me show you exactly what happened with that one, how that one was taken, and that's when we'll start to really talk about our topic today. Okay? So you should be able to see the chart. So that is part of that trade that got us that $1,200 for the full $2,400 profit that day. Okay. So take a look. All right. Take a look at the demand level here. Let me just get the question here. Everett, you're looking at 5 to 10. Okay. Ali, some of these are in the futures XLT, some are in the Forex XLT. Because remember, in the futures XLT, you also get the Forex futures. Okay. It is, and that's correct. That is the inverse. So you're going to see the pricing is the inverse. So take a look at the chart, though. Most important thing. Look at the demand level shaded in yellow. Why is this a demand level? Okay. Prices couldn't stay there and had to rally away. Now, why did they rally away? Okay? They rallied away because behind the scenes here, demand exceeds supply. There's a supply and demand imbalance here. Think about it. Would you say, and go ahead and answer some of the questions, try to be as interactive as possible. Would you say that price spent a lot of time here or a little time? All right, lots of time or just a little bit of time here? This is an intraday chart. Okay, yeah, just a little time, right? I agree with you. So what does that tell us about the supply-demand equation there behind the scenes? Now remember, when the trading books tell us when they teach us how to identify key support and resistance levels, what they do is they say look for areas on the chart where there was lots of trading activity, many candles on the screen, right? Heavy volume, right? Everybody gets all that. But if you think the logic through, I think you'll find that the opposite is true. Think about it. In any market, at a price level where supply and demand is most out of balance, are you going to get many transactions or very few transactions? Which one? What are you going to get? If there's a big imbalance in a market, you're going to get many transactions at that price or very few? Yeah, you're going to get very few, exactly. So what is that picture going to look like on a chart? Is it going to be many candles like all the books say? Or is it going to be very few, right? I think you get the point. So the fact that price spent so little time here, the fact that price shot out of this level tells us there's probably a decent amount of demand right here, okay? Now, this is the yen, Japanese yen, and now you may be thinking, boy, it'd be great to see what the banks and dealers, have on their trade desks at every price level. Well, we can see all that, not the detailed numbers, but we can see, generally we can see that on the charts, okay? Think about it. Let me ask you this. At this price level in this yellow shaded area, did everybody who wanted to buy, were they able to buy? All the banks and dealer desks, were they able to buy everything they wanted to buy? Were all the orders filled? No, exactly. We know that for a fact because prices had to rally away. And again, more for new people, I'm trying to get you to understand that, what this picture represents, okay? Because all we're interested in as traders, and really all we're interested in, is the picture that represents more willing demand than supply or more willing supply than demand. Make sense? So, if you understand that, move over to the right where the trade was taken, okay, right over here, when prices came back to this level, okay, what do we know about the people trading here? Well, the buyers are making a good decision, but what about the sellers? What do we know about the sellers? We know that the sellers are making the two mistakes that every consistent losing trader makes. Mistake number one, they're selling after a drop in price. Mistake number two, they're selling into a price level where demand exceeds supply. The laws of supply and demand guarantee that these sellers who take that action, that novice action, okay, will lose consistently. Maybe not every time, okay, but most of the time, okay. Now, let's go to component number two. So we've already said two most important parts of a trade: identify a quality supply demand level. Number two, profit margin. So take a look over here. Now, what I'm going to do is let me put a circle on this chart so you can really understand it. Okay, let me just give me a second here. I'll get it up for you right there. And let me capture the chart. 1 second here, and I'll get it for you. Okay, so take a look at this picture. All right, so now you should see a circled area on the chart. Okay, now pay close attention. That circled area represents the initial profit margin after above this demand level. Now, in the XLT, one of the things we talk about is when we're looking for key levels, support, resistance, demand, supply, whatever you want to call it, we do not cut through candles. Okay, we don't cut through candles. So prices in this red area, look, see these three red candles? There's nothing in this circle that would stop prices from rallying. Does everybody clearly understand that? That's why, 1 second. So make sure you clearly understand why that is. The fact, here we go. Right, so when prices come down and we want to buy right at this black line with a protective sell stop just below the area, when prices are at this black line after this drop, there's nothing in these red candles, there's no basing, no picture that represents supply that can stop prices from rallying until you get to here. Okay? So let me draw that in real quick. Just take a second. Let me do it this way. Just take a minute here. Not even. Drawing in PowerPoint on the fly is not a great idea, but I'm going to try to do it anyway here. And one more, and then I'll grab the chart. And the rest of these we'll go through faster. I just want to make sure you get it on the first one. Okay, so let me grab the picture again. And I'll try to get back to a lot of these questions in a bit. I just want to make sure we have time to get to the live markets and spend a lot of time there. So take a look. So the areas, the circled area, is the easiest part of this trade. Notice, again, strong drop in price to the demand level. We buy. And again, the reason why this trade works, it's not just because of the demand level. That's half of it. Okay? Maybe less than half of it, but that's half. That part makes it more attractive than the demand level itself. Does that make sense? Okay. I'll give you the supply-demand equation in the level better than just touch counts. Does that make sense? Because you could come back and touch that level 5 times. And if you're just touching it, I would buy the 6. You know what I mean? But if the first time, for example, prices go, more than 50% into the level, forget it, right? It's just a more objective way of doing it, okay? Again, I don't want to sit here and always beat up the trading books, but look, this is your hard-earned money you're putting at risk. I'm not a broker, and I'm just here doing this, I don't get paid to do any of these things at FX Street. I'm just here for your well-being. And so I'm just going to give it to you straight. I mean, the bottom line is you need to focus on the reality. I'm not saying you, John, anybody. I'm saying, you need to focus on the reality of how this stuff works and not, you know what I mean? Okay. Area, if this supply area that I'm pointing to right now was a little bit lower, this would not have been a great trade to take. Okay. Yeah. So Maurice, I think you're talking about down here, this pivot low. The pivot low is okay. As long as that's not like a pullback into something else to the left, which a lot of times it is. So just be careful with that. Make sure the pullback wasn't too deep. Okay, this is a fresh level here. All right, let's move on. The other thing I do at Online Trading Academy is I help produce what we call Pro Picks. So you should be able to see Pro Picks on here. And again, we're going to dive into the trades. So Pro Picks is a service where each day we give you a trade to take in the Forex market, at least one, sometimes more. You can see we give you the exact entry, the stop, the targets. We give you the strategy write-up, and then the chart. This is from a ways back, but I want to show you how I treated this setup. If you remember, this is late. This is going very late last year into December. Euro on the daily coming down into this demand level. We have this here in FX Street as well. So I wrote this up, and again, this is November 29th. This trade was put out there. This is for a big swing trade. As we know, this came way up. This turn here went up hundreds and hundreds of pips from that level. But take a look. So the very next day, okay, take a look. Again, I want to show you how I do this from the short-term side of things. So the very next day, actually later that day, prices dip down into that like I trade the very next day. Okay? All right. So this is just a day trade off this level. So just because prices are coming into a weekly level, it doesn't mean I'm putting my stop on the other side of that level. I'm going down to a smaller time frame and taking that trade. Let me show you exactly how I did that the very next day. So that day made about $3,500 just short-term trading off this larger time frame level. But take a look. The very next day, okay, on the 30th, took the same level, same area as a short-term day trade. Notice this is a 1-minute chart of the euro. Now, I'm not suggesting or pushing you to use 1-minute charts. I don't look at them that often. Usually the smallest time frame I'll go is a 5 or 10-minute chart. But here, now pay close attention, because price was into that weekly demand area, that means I'm comfortable going down to a really small time frame and taking anything that represents, pretty decent demand, because I know the profit margin is huge and I know the odds are stacked in my favor. So on that 1 minute, we were down in that weekly level, started to get a little 1-minute uptrend here. So as soon as the demand level formed here, I just caught the pullback here. Okay? But notice, another way to describe this profit margin, pay close attention. Notice here's a supply area, right? Does everybody see the supply area I'm pointing to? So you may look at this and say, well, there's no profit margin for this trade. But, okay? All right, but take a look. The fact that when this is a supply level, okay? But notice the breakout from this area right here, this green candle, which makes this a demand level, okay? Takes price up into here, and we stay there for a little bit. which means we are absorbing, okay, the buyers here, the demand is absorbing all the supply here, all the willing supply, which means when prices come back for our entry, which was this trade, okay, or part of that trade, there's nothing to stop prices from shooting higher here because these willing buyers absorb all these sell orders here. Does that make sense? Okay. So it doesn't have to be a strong, big red drop. Make sure that the supply to the left is gone. Make sense? Okay. And again, think about, now remember the main components of the supply-demand strategy. You know, what the level is and how to identify it itself. And secondly, when prices come back in the area, remember, we always want to focus on who is on the other side of our trade. We want to make sure that we're trading with people that have no idea what they're doing, people who, are just, novice traders. So, think about the sellers here who were selling to me when I was buying. Let's go over it. Let's see if you could do it. There are 4 mistakes that this seller was making that almost guaranteed them a loss, which means if we know what those mistakes are, we can be consistently profitable, right? Because we can identify that group. What are the 4 mistakes that those sellers are making there? Okay. All right, Derek. Yeah, I'll get a little more basic in a few minutes. Most people here have been through this a number of times, but so they're selling after a drop in price. That's mistake number 1. Selling into an area price level where demand exceeds supply. Mistake number 2. Okay. What else? There's 2 others. The big one we haven't even mentioned yet. Against the trend. Against the trend, right? Okay. Yeah, so they're selling in the context of an uptrend. Yeah, and Rob, exactly, and Forbes, yeah. They're selling inside a big weekly demand level. That's like account suicide, right? Okay. So those 4 mistakes, we identify that. It means we want to be the buyer. All right. Now again, the reason why the profit margin is so nice here, and I wanted to show you this one, the first example we looked at, we saw there were big red candles down, which means there's usually going to be big green candles up. But the other way to look at it is this. This rally here, okay, we know the profit margin's outstanding on the larger time frame. But this rally that causes us to be a demand level, right, when price is here, the buyers who are buying here are absorbing all this significant supply to the left. So that means the price should shoot right through this level. That's why we took the trade. Okay? All right. Now the very next day, price is just starting to come on level. Okay? So I did it again. Okay? I'm buying. I mean, when you're in this larger time frame demand area, okay, right, we, obviously just doing it again. Okay? Just jumping on this thing when the odds are stacked in our favor. So 3-4 days in a row, aggressively buying the euro and making anywhere from $1,000 to $3,000, doing it a day. But now here's the other side of it. Do you remember what the news was in the euro back then? Anybody remember what the news was? What was the news in the euro? Yeah, and Andrea, there's really not a lot of nuances. Remember, these are 1 hour, the end of the euro. Jason Volkner, they're talking about ending the euro back then. So if you're focused on the news and a currency that might end, you're probably going to push the sell button. But if you're focused on the reality of how you make money buying and selling anything, you're clearly pushing the buy button because price was at a demand level or wholesale prices, as we call it as well, right? Okay? So, there you go. But let me show you something else here. Okay. I want to show you, instead of just showing you all the trades that I take, let me show you one more here, and then we're going to dive into the live markets after this one. Okay. And Andrew, it seems like there's a lot of nuances, but remember, folks, these are 1 hour webinars. Okay. People that come to Online Trading Academy, they go through the 6-day Forex course, and then they go into the Forex trading room, which is 3 to 4 sessions a week, every single week. So there's, we keep it very simple, very structured, very rule-based. There's really not a lot of nuances. It's real kind of simple and rule-based. Okay. Maurice is asking the best question of the day. So Maurice, if we were giving out prizes, you would certainly get the prize today. But I don't have any prizes, so sorry about that. But let me answer your question. Okay. And let me go back to, this trade right here to answer your question. Let's go back to this just a few weeks ago here. Okay. All right. Well, Maurice, send me an email. We'll talk about that, or I'll pass it on to someone. I'll mention that you definitely get the prize. So his question was, what makes you comfortable pulling the trigger down here at the demand level? I mean, after all, right? There's nasty red candles, a downtrend, and we're always taught to sell in downtrends, right? What do you think the news is on the yen here? Probably pretty bad, right? All these negative, bad things that push people to sell. Maurice is asking, what makes you comfortable pushing the buy button here? It's this, Maurice, and this is the most important thing I'm going to say today. Because everybody's taught to do this completely wrong. Everybody's taught to trade backwards. Everybody's taught to invest backwards. Think about it. Everybody's taught to buy when the news is good, buy during the uptrend, buy this, buy that, okay? You're following people that are scared to buy here. It's only because they're not focused on the right information. You're reading the trading books. You're listening to the news. The reality, you want to know what's really happening here? The reality of what's happening at this demand level, when I push the buy button, not only am I comfortable buying there, I'm thrilled and excited to buy there, okay? As soon as prices start rallying away, that's when I'm scared and uncomfortable buying. Because the reality of what's happening when prices collapse into that demand level is this. You just walked into your favorite store, and your favorite item that you went there to buy, there's a sign right when you walk in the door that says your favorite item that you came to buy is on sale today only for half price, and there are only 5 left, and they're in the back of the store. What are you going to do? Maurice, what are you going to do with that information as soon as you read that? Yeah, you're going to run. Exactly, Harley. And how many are you going to buy? You're going to buy all you can, right? Isn't that what you do every day when you buy and sell things? Why is it that when people come to trading, they all do the opposite? That's why most people lose, because they're trained to do the opposite. Now, the other side of that is, if you're actually, serious about trading and you're starting to get this, think of the opportunity you have. Everybody out there is trained to sell at or near the demand levels and buy at or near the supply levels, right? So that's the opportunity you have, okay? All right, last one here, then we'll get to the live charts, okay? Yeah, it is. Who said it's an enormous edge? I didn't see who wrote that, but whoever did, that's the best way to say it. I can't say it any better. It's an enormous edge. Okay, take a look. So I want to know me doing this, that there's other people that are doing this as well. I don't want to show you my trade. This is an email that came in to me from Sean Way, one of our XLT members, from April 18th. He does very well at this. Jason Volkner's with us today. He does very well at this. But email comes in. He says there was a nice short in the JY yen this morning with a perfect trap just before it. Jump in at night with a high. Anyway, he did well. He says, I'm sure you caught this trade too. This is the exact trade you taught me in the XLT. So take a look at the chart. So he's got his supply level up here, and here's where he entered his position, and he made about $1,600 on the trade. Okay? All right? But take a look. So notice how he writes the word trap here. This is one of the most popular setups in the XLT. Okay? So you're not in the XLT. Most of you aren't in the XLT, but I'm going to give it to you here. I think it'll help you out. Okay? So the fact that there's a supply level sitting here just before the supply level that we sold at, right? Okay. Means that prices are going to get stuck or hung up here, right? This is a prior days or weeks high or something. So when prices go above this resistance or supply level, let me ask you, does that set up bullish or bearish expectations? Does that set up bullish or bearish expectations? Prices go above a resistance, pull or high. Bullish get both down. Good. That's why the short worked out so well. One of the reasons. So when prices traded above that area, that invited a lot of people into buying. You can see this spike in buying. Everybody see this spike in activity right here, which took prices right up to that. Actually, people ask me that question every single day. But it's difficult because if you've got something that's working really well for you and your group, why would you ever want to put that in a book? You know what I mean? So anyway, okay, all right. Let's move on. So he did pretty well with that trade, but again, this is all market timing. Everything we're talking about today is about timing the market's turning points in advance with a very high degree of accuracy. Remember, people say you cannot do that, okay? We say you can with a very high degree of accuracy, timing the market's turning points. That's the key to low risk, high reward, and high probability trading, all right? So let's move on here. And let me get the charts up for you. And if you were with us right from the beginning, you saw I had the dollar Swiss up. There was a trade that was just meeting entry. And we can start there, I guess. Okay. And you can take a look. Let's focus on this dollar Swiss for a minute. Can everybody see the charts okay? And one thing, though, and I'll do this again, but I really apologize if I'm missing some questions. I try to keep the flow going and answer questions as much as I can. So apologize in advance if I missed something, but hopefully your question will be answered during the session. And I'm fairly caught up on email, so I'll give you my email address at the end as well. Okay. But take a look at dollar Swiss. So big picture, we've got a downtrend going on. So as long as we're not too close to larger time frame demand, we're okay taking small time frame trades on the short side. Okay. So take a look at this chart right here. All right. So here's a dollar Swiss on a 5-minute chart. And I want to specifically circle, one second, I'll get this the right way for you. And then, just a second, I'll get the chart up for you. I'm just putting some lines on it for you. And then we'll set up some trades going forward too. So let's look at the Swiss again here, and let's think about the concept we just talked about. So we've got our supply area here, quality supply level in the context of a larger time frame downtrend. And notice right here, when prices rallied up for the initial short, okay, notice the green candle here, okay? I will put well, I think you see what I'm pointing at, right? Let me just capture the chart again for you. So everybody see this green candle right here that I'm pointing to, this big one? So this green candle followed by this gives us our initial profit margin. That's what we're looking at, okay? Now this is barely, like maybe a little better than 1-to-1, okay? But honestly, I'm not looking for like 3-to-1 on most short-term trades. I'm looking for small, high probability moves. Sometimes 3-to-1, great, but it's not always there. When I know I can capture tons of 1.5 to 2-to-1, so all those little short-term trades I'm showing you, a lot of that are those. So the fact that you have a quality supply level here, and the way prices come back to that level, tell us that this drop should happen. Now, this drop happened during our session. Remember, when we started our session, this was just meeting entry. So a lot of you, I had this up in the beginning. I don't know if it looked like there were about 150 people in here. There's more now. So anyway, the supply level with this rally suggested prices could drop down to here. The blue line is the demand level, or the area where we'd expect some buyers to come in. So we would want to get out just before that. I don't know if you take profits already, maybe somewhere down there, but okay, you want to get out just before the demand level. These are very high probability turning points. Okay, yeah. So when prices, let me get back to the chart here. When prices come back to this level, Maurice, I think I understand what you're saying. Yeah, when prices come back to this level, the sellers, obviously the supply orders, supply side is being absorbed there, okay? And let's see. Sylvester says he took the trade and you took some profit. Nice job. Just a little short-term trade. Good job there. Nice one, okay? You could, Ralpho, yeah, you could wait for the level just above it. Nothing wrong with that. It's just that when we were starting the session, this one was hitting first. That's all. You were just going to hit this one first. So you might be thinking, well, if prices come up here, would you take it again? I probably wouldn't, because prices went more than 50% into that level. But having said that, I wouldn't be surprised if it worked out again, but, we'll see. Okay. Let's go over to another market. I really don't care which markets we look at, so I'll just kind of go through the list. And we'll also take a look at the dollar. I see someone look at the dollar. But let's pull up the euro here. Okay, so you should be able to see the euro. Now, I'm not looking at the euro futures. Normally I do that, but Figure we'll just go to the spot market since more people in here are trading spot than anything else. Okay. And let's take a look. Here we've got a 5-minute chart. So first of all, this is the chart we've been going over like every session in FX Street, right? So there's the weekly level that we traded off of. That was a pretty obvious level, okay? And remember, those slides I showed you, remember, this was the buy down here, which took price up. We also focused on this one. We focused on this one, and then we recently traded off this one. So now we're coming back down. Let's go to the smaller time frame since we know where we're at in the larger time frame. Yeah, little ones, Ali. Let's take a look, okay? Give me just a second here. I'll get the chart up for you. So what I'm going to do is I'm going to go to an hourly chart right there, and I'm going to put a horizontal line in, and I'm going to scroll left and try to find and just see where we hit price and find the demand level below it. Okay. So now pay close attention to how we're doing this. Hopefully this is showing up on your end. So I just scrolled left, and the first time I hit any candles from the low is right here. Okay. Everybody see that? Right in here where I'm pointing? This is when I scroll left from the recent low, this is the first time I hit candles. So to find the demand level, I want to go down and left until I find the picture that represents more willing demand than supply. That picture is right here. I'm going to draw it in, and I'm going to share it with you. Okay. And we'll go over the prices and set up the trade in just a second. All right, there it is. So there it is. So all I did here was I looked below that line and found the nearest demand level, which is right there. Prices for this one, 132.27. I'm sorry, 139.27 to about 139.05. So I put my stop 138.98, and I'd be entering at 139.27. Okay. Now that's that's not a short-term day trade. Okay. So you have two choices there. Or three. You can not take the trade if you're not comfortable. You could take the trade as more of a maybe longer-term day trade, or you could take it as a short-term trade off of like a little 2-5-minute level that forms when prices are back into that. Okay. All right. Now, let's go over those 2 points. How does the demand level look? Well, did you have a lot of trading here or just a little trading? How much trading did we have there? Lots of trading or just a little bit of trading? Okay. Boyke, yeah, that's the whole, we cover all that in the XLT in detail. I try to give you as much as I can here in the time we have. Yeah, so one of the odds enhancers we go over is this one. So price spent a little time there. That suggests a big supply-demand imbalance behind the scenes here. Now, number 2, how did prices leave the level? Was it a strong rally in price or a gradual rally in price? Yeah, it was very fast, strong. Again, that suggests lots of willing demand here. Okay? We're looking to buy just because this is a potential demand level down here. So the second part of the trade, though, we absolutely have to have a profit margin. So here's the key. When prices hit this level, this demand level we just went over, okay, when prices hit this demand level here, we need to make sure that the nearest supply level is at least twice this distance away. Does everybody clearly understand that? Okay? When prices hit this level, we need to make sure that the new supply level is at least twice that distance away, otherwise there's no trade. If it's like 3 times, 4 times that distance away, it's probably a great trade. Does that make sense? Okay. Alright, let's, okay. Yeah, it is going to be aligned with some daily demand as well. I was going to point that out, but you beat me to it. Nice job. Okay. Yeah, some of that's in XLT. XLT stands for Extended Learning Track. Alright, let's move on here. There's some really nice supply levels above in the euro as well. So we'll keep an eye on that. Let me go back and see. Let me find another one here for you. See if we can get one more off. Just a second. Yeah, trader, that hourly demand level we just looked at, that kind of lines up with some daily demand as well. Yeah, let me see if I can find a little short-term level. I'm looking around here. Let me see. I had a couple others. I just can't seem to find it at the moment. Just give me a second here. One more market. Take a quick look at the euro yen. Haley, I don't really incorporate volume all that much. Okay, it's really not important for what we're doing. If anything, it's going to hurt you, not help you. You could, because what you're really looking for, are you really looking for, the volume that you see on the chart with it, which is all past volume, or is potential volume more important? Which one's more important to you as a trader? The volume that you see on the chart there from the past, or potential volume? Which one would you rather see? Yeah, so I would rather know where the potential volume is going to be. Where are the potential strong willing buyers and strong willing sellers? So volume that you get on the bottom of the chart is never going to help you with that, right? So why not? What I'm getting at is the candles on your screen give you that information better than putting volume on your chart does. Or if you want to see, now don't get too confused when I say this, but if you want to see where the potential strong volume is going to come in, don't look back on the chart and find high volume areas, find low volume areas. That's right. The lower the volume you have at a turning point, the higher the potential volume, right? That just means there's more willing buyers and sellers behind the scenes. Everybody understand it? It's a backwards way of looking at it, but it's a real way of looking at it. Make sense? Hopefully I just didn't confuse too many people. Didn't mean to do that if I did. All right, let me pull this chart up here. Okay. It comes down to the same old thing. There's the book way of doing it, and then there's the real life way of doing it. I guess it's like that in anything, right? All right, let's see. Let me go one more market here. I had one set up for you that didn't meet entry yet that was fairly close. Yes, this Aussie. The Aussie is falling, so let's find an area to sell against. And this one, if we come down to a small time frame here that I will share with you in just a second. Okay, I'm going to pull the chart up. Now, let's see here. All right, let me grab the chart for you. There you go. And I'm not in love with this one, but I'll pull it up. I'm going to pull two up here. So these are going to be two areas to keep an eye on. One's pretty close, the other one's not. All right. So both of these have, the upper one is definitely a better looking level, and it's got another level just below it. So it's probably going to be a more solid level. But if you're looking for a little bounce type trade, this one below. In fact, let me just tighten up the risk a little bit. We can do this to make this a little more attractive. Right here. So in the XLT, this is what a lot of XLT members would do. Someone's asked if the session is recorded. I don't know if it's recorded. FX Street would know. I forgot. But there's plenty of recordings where we go over just the same information. Okay, so you can go back and watch the recordings if you like, and if you have any questions, just send me an email. Okay. So here's the level. This will probably work a little bit better for us, right? Again, got a decent-looking supply level, and notice the move away, right? It's a decent profit margin, giving us at least, in other words, the chart here, okay, is offering us, a 2 or 3 to 1 payout, okay? So as long as we're on the right side of the curve and the risk reward meets what you're looking for, there's some opportunity, okay? There's my email address, sseiden@tradingacademy.com. That's SSEIDEN@tradingacademy.com. So if you have any questions, shoot me an email. Tomorrow's a big travel day for me, so I've got plenty of time to answer emails. can't go much further than I'm going tomorrow, so I'll get plenty of time. So if I don't get back to your email, there's no excuse. Okay. Today was just a little euro early. The only trade I took today, someone asked, I just took a little euro early. Okay. Harley, yeah, Harley, are you in the XLT already? You're probably not. If you are, remember, there's a very important reason why we cut off some of the candles and don't cut off the others. Remember exactly everything we do at Online Trading Academy is very rule based. So there's a reason why we draw the lines the way we do. For supply, we do not cut off the top wicks, but we cut off the bottom ones. It has to do with who we want to sell to and giving ourselves the best chance in the trade. Okay. So there's my email address again. I know we're out of time here. I believe John O'Donnell is coming up next. Is that correct? Am I correct on that? I believe he is. Yes. So how many have heard John O'Donnell before? Anybody heard John O'Donnell before? You definitely don't want to miss John. Yeah, John O'Donnell. It will be interesting and very informative. Okay. Let me just tell you, John. I know John well, and John is the only person I know on the planet that has been bullish. You know, everybody's bullish on gold now, right? Everybody's bullish on gold, but John O'Donnell has been bullish on gold for years, and as strong as he will scream gold at you probably today, he was doing that, years ago. But he'll tell you all about that. Anyway, so you're in for a real treat. Hopefully, the session we just went over was helpful. And again, if you have any questions, just let me know. But really focus on those 2 points: the quality of the level and the supply and the profit margin. Those are 2 important things. Look, if you are running a business, those are the 2 things you would focus on, right? If that's the case, make it the same here. All right, everybody. Thanks. Have a great day. And talk to you later. Thanks.